Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Now guys, let's take a brief look at the gold market. In recent time, as you can see, gold market mostly is calling in a tight range, and the recent couple months probably it forms a mixed signal. So it's one, initially this was absolutely logical behavior. So when the market has formed this butterfly, we said yes, market has hit major targets, market has reached significant resistance. It's normally if we will get some retracement down. So at least this retracement should be 1190, since this is the just rate support of the most of the recent rally. So this will not be really significant retracement. But after that, when market starts to form the head, on the slope of the head, we have found some warning signs for the perspective of these head and shoulders. Particularly speaking, market has failed to complete free drive buy pattern and turns to the upside, has turned to the upside a bit preterm. So that led us to think that we probably could get some kind of the action above the head when we got the bullish grabber last week, and market indeed has moved above the top, grabbed the stops above the 1260, but that was the final destination. So market wasn't able to hold above the 1260. So that's why today, guys, we probably again should return back to this shape of this head and shoulders, because right now we see that the advantage stands on the bearish side. In general, all this mess around this head and shoulders absolutely doesn't change the major picture. So if you will take a look at the monthly chart, you will see that market mostly is calling for the second time in a row just right below the major resistance. So this consolidation, even if market will complete the head and shoulders pattern with the moving to the 1130, if it will even hit the major target, this absolutely will not hurt the existence of the bullish trend that we have. This will be normal retracement, but I suspect that probably market has all chances to stop around 1190. Let's complete the minimum target of the head and shoulders that stands as a ABCD pattern based on the head and on the shoulder. So what we have in the recent action, first of all, this was classical wash and rinse of this top. So market just grabbed stops that have been placed above this area, and in fact the action 100% corresponds to the name of this pattern. This pattern, as you know, the stop grabber. It suggests the taking out of the stops, so grabbing of the stops, and in particular precisely this action has happened. So market grabbed the stops, dropped down, and take a look, trend has shifted bearish. So market wasn't able to continue move higher. Yes, it has erased the opportunity for this butterfly we initially had discussed, because market has moved above this top and break the major swing of this butterfly. But at the same time, by taking a look at this pattern that we have discussed as well, so recall what we said, if market will accelerate here and hold above this top, this could lead to this some kind of the butterfly. So this could be left wing, that could become the right wing, but this also hasn't happened. And this price behavior, that's market just taking the stops, drop below, it's of course not very suitable to moment to the action when the head and shoulders fails. This is not the case. So probably this indeed was just some rally for grabbing the stops, and then right now it dropped down. On the intraday charts, we see another bearish signs. So if you'll take a look at the 4-hour time frame chart, first of all, from the pivot point framework, take a look what has happened. Market has reached this market has moved above the pivots. This pivot point is for coming week. This is weekly pivot point for the next week. So it has trying to move higher, dropped below the monthly pivot again. So it wasn't able even to reach the monthly pivot resistance one. And right now it stands below the monthly pivot. That's the first moment. Second, guys, take a look that here we could recognize the shape of the reverse head and shoulders. It's a bit sloppy and choppy, but in general, you could probably recognize that this left shoulder head, right shoulder has been formed. Right when the right shoulder has started forming, as you can see, we see this fast acceleration that's very typical for the hand shoulders action, because this part where bulls should take in the control, and we have spoken about this rally, this acceleration to the upside. That's why our target at minimum this 1260 has been reached. But take a look what has happened next. Market wasn't able to pass through the neckline, so it has moved here, trying to make the breakout, failed, and drop lower. So this is classical and typical failure of this head and shoulders. Let's call it in this manner. What does it mean? It means that in cycle this acceleration down. Right now market stands almost at the bottom of the shoulder. It means that it's very, very probable that in the nearest future market will close below the 1285 areas, bottom of the shoulders. This is very important because this should lead to the moving and drop below the head. If this will happen, it will mean that market will break the neckline on the daily chart, and that in turn could lead to the completion of this retracement. So currently, as I said, we see that some advantage stands on the side of the bears, because we see some moments that should not happen to normal behavior when the market really bullish, and when the hand shoulders fails and market is forming the butterfly, it should not show the action like this one. That's why we think that in the nearest, the coming week, in the nearest future, market has more chances to continue move lower. It means that currently it's not the time to take the long position. So we need just to wait. So if you have taken the position based on the grabber, I hope that you have taken the profit in this area when the target has been hit by the grabber. For taking the long position, we need to see the completion of this either hand shoulders or again the failure. So we currently we can't exclude any scenario, because you can see this is really messy action. So you can see it's very market changing the direction very fast, and every day brings something really unexpected. That's why we can't exclude even the situation when the market just will move above this top again and will hold there. If this will happen, the final market will close above the 1260 and hold above this top. This will bring back to life idea of the possible further upward continuation. So we need one of the two things. First one is either completion of this retracement, second one, or moving again above the top and holding above this top. This will give us the confidence with the possible taking the long position. So that's all. But recent behavior, as we said, we see some turning the equilibrium in the favor of the bears right now. So let's be prepared for a possible action to the downside. Maybe the Fed comments, Fed meeting will bring some new inputs in the current situation. Maybe the situation will change as a result of the Fed meeting. We will see. But currently, guys, we think that it's not the time to take long position yet.